if you look at who is the biggest, debtor in the world, it's the U.S. government. The U.S. government has a national debt of almost $30 trillion. And so if there's 10% inflation, that knocks $3 trillion off the debt, right? So the government wins. Who loses? The bondholders, the people that bought U.S. treasuries, or anybody that holds U.S. dollars, they suffer that loss that the government gains. But the government also has all sorts of ways that it benefits from inflation. Inflation creates phony gains that they tax, right? People have appreciation in their assets. The government taxes it, but it's not real appreciation, it's dollar depreciation. Also, Social Security is indexed to inflation. And to the extent that they lie about inflation and then they don't have to increase Social Security as much, that's a way to reduce Social Security benefits without voting to cut them. And that's what they want to do. They want to cut benefits without having to be on record as voting for the cut. So inflation benefits the government in all sorts of ways. And of course, when the Federal Reserve monetizes the debt, creates inflation by printing money, they're buying U.S. treasuries. They're monetizing the debt. They're making it easier for the government to finance its debts. And by artificially limiting interest rates, because that's what inflation does, the Fed is printing money and buying bonds to keep interest rates down. That enables the government to continue to service its debt. Because if interest rates were allowed to go up, the government would have to default. There is a cycle, and inflation could lead to deflation. Deflation could lead to inflation, depending on how the Federal Reserve reacts. So if the Federal Reserve reacts to inflation with aggressive rate hikes, and contracts the money supply, which is what it should do, we will have a deflation. My concern is the Fed won't do that. And in fact, any sign of deflation is immediately met with inflation, because the government is so scared of deflation. Even if we get close to it, even if we just get lower inflation, not actual deflation, but if the inflation rate gets too low, the government panics because they're so worried that we might get deflation that they preemptively create even more inflation to try to prevent that from happening. But if we did have a big deflation, what would the government do? They'd print a bunch of money. They'd slash interest rates. So any deflation automatically leads to a surge in inflation. But whether inflation will eventually produce another round of deflation depends on what the Federal Reserve does. Again, I think at this point the stakes are too high, and they've already staked out their position. Really, they're staying at zero. They're not going anywhere. And if inflation gets worse, well, they're just going to pretend it's not a problem. They're going to pretend it's transitory. Then they'll pretend it's a good thing. But the only thing they won't do is fight it, because they can't. I mean, if the Fed could actually fight inflation, they'd be doing it right now. It's already bad enough that they should be doing something. The reason that they're not is because they can't, but they can't admit that. So they're pretending they will if inflation ever became a problem, even though it's already a huge problem right now.